Yeah, you can see here, like this. This was not quite as positive as that candle we saw, that weekly candle we saw on cable, but still quite a nice big blue candle there. A few people might have thought, hey, this is something that's indicating this is a trend change. We had a slightly lower low, 104.56, below the 104.60 low from the week before. Big recovery. We even managed to beat at some stage that candle, push halfway through the next candle. So, you know, on a candle formation only, you might be thinking, this looks pretty good. You know, I'm going to be looking for buy signals here. I'm going to be buying into dips, and it just wouldn't have worked. So all that really did was indicate stabilization over the next few weeks, and I'm wondering if that's all that big blue candle in cable is indicating as well. You really need other factors to back up any sort of trend change, and we're not seeing that at all. Euro, definitely no pattern there that's telling me that this is about to reverse. I don't think this is a double bottom. I think this is purely just a consolidation pattern. So I think the risks are to the downside. In this one, we got really oversold, but really that's quite a pathetic bounce, rally really to unwind an oversold situation. A few days of rally and that's it. We petered out bang on the first challenge really. So doesn't look very good to me. I would stick to selling into rallies. I'd say a 2-day close above the trend line, I may start to think differently, but I would need more than that to be buying in, to be changing my tactics of buying into any weakness. I'll have a look at the Aussie dollar. We'll look at the four currencies I cover are cable, euro, dollar, yen, and Aussie dollar. So those are what I track every day. So might as well just plough through those to start with. Probably worth having a look at gold and oil as well. Stock markets aren't really doing a huge amount at the moment. I'm waiting for some sort of indication of direction on those. So yeah, not a dissimilar picture, is it really, with the Aussie dollar to the euro and cable? Again, had a quite a stable run here over the last 3 months. We've just been going sideways, but I'm not seeing anything there that's telling me to look for the beginning of a bull run. Not yet, anyway. Let's see what we've got here on the weekly chart. No, nothing really. Just a nice consolidation pattern. We had one back here which lasted about 2 months. This is going on a bit longer, 3 months. Certainly been slightly more volatile as well, but this first Fibonacci resistance at 78.56 area has really done its job. We've not managed a weekly close above there yet. So let's just have a look at the monthly chart. That's not really telling us anything either. Let's stick a trend line on here. There you go. I guess that, if anything, shows you how far down we could get to. 70, 90 area, 70, 80 area. Well, by the time we get there, it would be all the way up here, somewhere closer to the 7200, 7150 area. But that does give you some idea of what the downside potential is. I wouldn't get too excited about the fact that we're oversold on the monthly chart. We can stay oversold for quite a lot longer, in fact. So this period of stability has at least given the weekly chart an opportunity to unwind that oversold situation. You can see how long we stayed oversold for in the weekly chart. So buying into this pair in the hope of unwinding that would have been a killer. Some of the steepest move of and actually has been this area, and maybe sooner rather than later now we'll be ready to resume that bear trend. I think so. This trend line here doing its job nicely. We haven't actually managed to close above it. A couple of spikes above, but quickly the bears piled in, sold it off. Same thing yesterday. Even though we had a blue candle, got nowhere near it. And today we're backing away from that trend line. So yeah, I think this is all a fairly negative picture to me, really. As I say, a day or two's close above this trend line would be the very minimum that we'd need. And then we'd have to challenge these April highs up here. And then it would be a case of getting through the 100-day moving average and testing March highs. There's a lot of obstacles here, and there's no pattern or any other indication to me telling me that I want to buy this. So certainly tying in with a stronger dollar still. I'm not going to be betting against that yet. I'll finish up with the currencies on the dollar yen, unless anyone's got anything else they'd like me to look at. The dollar yen's pretty boring, so I'm not going to spend a lot of time on it. This is giving us absolutely no clue as to where it's going in over the medium term. Let's just blow this up. If you like trading ranges, this is the pair for you, for sure. Again, I think I've overdone on the trend line, so I'm going to take some of these off. Okay, so we're in this kind of triangle situation going on here. As I say, you can see that we've just basically gone nowhere, certainly this year, direction-wise. Move up, move down, and it's just ranging and ranging. So intraday levels are actually working quite well. It's obvious that this trend line is going to be key to any move on the upside, so we're going to have to break through the 120, sort of 45, 50 area if we're going to have any sort of positive indications for this pair. We've got the 100-day moving average down here tying in nicely with this lower trend line around the low 119 area, 119.30, 119.20 area. In between there, we've got this little fib level around the 119.65 level. So if you're just trading these kind of three levels in and out, that could work quite well. And then we just wait for the breakout, really. If you can see something else on there that I've missed, but really this isn't giving me a whole lot of information at the moment, and it really is just a case, I think, trading in and out of the range, in and out of those levels, and then waiting for a breakout.